Welcome back to the channel. I bet everyone thought I was dead, but I'm breathing. Last time I talked to you guys, we were talking about a trade on NVDA, and we're looking at the chart here. Let's just say that trade took a piece of me. We'll leave it at that. So congratulations to anyone holding NVIDIA. Love the company, hate the price. Still hate the price. But you know what? I'm done fighting this one. We were in a battle, and I took the knockout blow. So I was selling, I was short the 350 calls or 360 calls. And they had their earnings and blew right through that. So the calls that I sold for, I don't know, I think 500 bucks, something like that. I had to buy those back for thousands of dollars. So that was a nice learning experience. We'll chalk it up as that. But hey, that was the largest stock move of all time. I think the stock was up 125 billion dollars in that one day, which is incredible. 120 something billion. That's like the size of Disney and Nike. Just boom, being added to the stock. So, needless to say, I am taking a break from selling options the way I was. Right now, I'm sticking to buy and hold strategy, and I'm only going to be selling covered calls and cash secured puts. So that's a little update on the trading side. When it comes to investing, I am doing a couple things new, but I also want to give a quick market update. Um, Things are moving. There's some movement out here. The market is still being pretty narrow. If it's not a semiconductor or cloud computing stock, it's not really doing much. Um, so let's go over to our checklist here. We've got the bear case and the bull case. So let's go over the bear case again. Things that we need to see resolved is inflation, which we'll see those numbers later this month. Interest rates, I have in pink here because it looks like they may raise again. Who knows? The economy and the markets look stronger than they did a few weeks ago. So if you're the Fed, you said that you're going to be data dependent. Well, the data is telling you inflation's still elevated. Economy can take more rate hikes. They may raise again. We'll have to see. Earnings recession. Earnings look good. Earnings look good. So that is green. We could almost take that off the table for now. We will take that off the table. Banks and credit crunch. I think that's still going to be an issue, so we're going to leave that there. Commercial real estate, we're going to leave that there. Rich valuations. We seem to be getting richer. Nvidia they did have really good earnings, but yeah, the stock is priced to absolute perfection. Again, love the company. It's just things get a little hypey, little hyped up, and then narrow breath here. So in the S&P 500, there's five stocks that are moving the market there. Five stocks. So there's 495 stocks that over year to date are flat or negative. So to put that in visual perspective here, this is a 3-month performance of the S&P 500, and you can see it's bright green in a small sector, a small corner, and then the rest is kind of beat up and bloodied. So for the market to really sustain this rally, we would want to see more green in other places instead of it being so concentrated. And the stocks that are green are great companies. But they've moved a long way really quick, and we need to see some of the other sectors pick up the pace for this rally to sustain itself even more. Otherwise, it's just going to be Amazon up 100%, Google up 100%, Apple up 100%, NVIDIA up 1,000,000%, and only a handful of stocks get all the gains, which could be the case, but that doesn't really represent too healthy of a market rally. So that is a new thing that we are watching here, is to see if the market rally can broaden out. Um, it's pretty interesting because you're seeing oil, commodities, um, healthcare looks weak. There's a lot of things that look really weak, but AI is saving the day. So we've got our bull case down here that we talked about a while ago, and some of these things are playing in, right? So AI, automation, robotics, lower cost of energy, the cost of computing going down, different types of economies out there. Instead of going to work a job 9 to 5, there's so many different avenues out there. You could use AI, you can use this, Web3 to build a brand and build a different type of business for yourself. So there's a lot of good things going on in the world. I still think short term we've got things to work through, but it seems like they're getting delayed. Um, the recession keeps getting delayed, so we'll have to see. So um, let's take a look at the yield curve. So this is something we've talked about, and this is definitely something that we need to pay attention to. So the yield curve is inverting deeper, which is interesting. And again, it's like we're delaying this inevitable that is eventually going to happen. So when we look at the yield curve, where we at here, we go max. So remember, we've talked about this. The yield curve inverts. That's when longer term rates are lower than short term rates. So that's because the Fed jacks up rates quick in a short period of time. It takes a lot longer for those longer term rates to increase in the yield. Different scenarios like that. So these gray bars, reminder here, are recessions. So you can see when the yield curve inverts, and then once it reinverts, gets back to a normal trajectory, shortly after, that's when we see the recession. So we are severely inverted, and it looked like we were coming out, and now we're going back down. So what that tells us is eventually when we start to make our way back up, and when we make our way back up past this break even point, that's when you can expect to see that we enter into a recession. So I've made a video saying get your umbrella ready. I'm saying now, don't put that umbrella away, but you can set it down for now. Keep it close and keep an eye on things, but it looks like the storm may be delayed a little bit longer, I guess is my point here. Because we need to see the yield curve go back up, and then once we kind of make our way back up, then that's when we should see, okay, things are going to get real here eventually. So again, 2000 inverted, went up, went back down, then we shot up, then the recession hit in 2001. Same thing here, 2006, inverted, uninverted, inverted again, came back up, then 2008 happened. So it could be a couple years till we see the recession. Could be a year, could be a month, 2 months, who knows. But it does look like there's more strength short term than it looked I'd say a month or so ago. So my plan here is the market feels a little bit like a casino. For example, this is just the perfect stock. I mean, besides NVDA, we already looked at NVDA. I mean, it's gone from 112 to 400 in 6 months. So less than 6 months. The other one that just kind of shows where it's like, hey, sentiment's getting a little wonky all of a sudden is Palantir. So this was one that I mentioned I was buying up in this range here, and I sold it when we got over to $12. I love the company, but when I get a big move really quick for what I see as just a change in sentiment and momentum, I'll take my profits and leave. So again, nothing has changed here with the company. They had their second profitable quarter, which is big, but this is all just hype. This is all AI hype. But Palantir's been doing AI for a long time, so it feels very much like a casino, and you play stupid games, you win stupid prizes. Ask me on Nvidia. So for me personally, I'm still going to be watching the markets. I'm still going to be dollar cost averaging into stocks that I really like. The one I've been buying here has been Enphase, and it looks like it's making a little bit of a bottom, but who knows? They still have the interest rate headwinds and things like that coming their way. But I do like this company long term, and if it were to fall 20%, I'm okay holding my shares that I've been dollar cost averaging and adding some more. The other one is PayPal. Oh, it looks so ugly. But we haven't really found a bottom. We're still kind of just bouncing around here. But this also is a stock that I think long term is going to be a winner. There's a lot of fear here for many reasons. But I do like this stock long term. We could still fall to 40, but that's fine. I'll fill up my position as we're getting lower. Other than that, not making a whole lot of moves. But again, we're watching the yield curve. We're going to see when we start to re-steepen, I think is the term, when we start going back up. And then when we start going back up, that's when we should really bring the umbrella back out. But we're going the wrong direction here. And again, just look at 2006. That's when we first inverted. We poked our head out. We went back in. And then we came out. And then finally in 2008, the recession hit. So something like that could happen. It could be something like 1990, where we go under, we come up, we go back down, and then again, it's 2 years later that the recession actually hits. So yield curve is what I'm watching. As far as the debt ceiling, they've supposedly reached an agreement, and so they're going to be doing whatever there. As far as yields go, it looks like, wow, yields were a lot lower today, and then they shot up again. So one thing that's interesting with the debt ceiling is that, I think I have this pulled up here. This is the Treasury's balance sheet, the deposits that they have, and they're pretty much have like 50 billion of cash, which is like nothing. And so when they do pass the debt ceiling, the Treasury is going to issue a ton of bonds. And so what that, supposedly, I'm trying to understand this a little bit more, this is going to take liquidity out of the market, because there's going to be a huge influx of, they're having to refill their balance sheet, so they're going to issue a bunch of bonds. And so they're going to be taking money from investors, right? So if they're issuing a bunch of bonds, that money is going to their balance sheet instead of going elsewhere. So they're sucking up liquidity. So that's going to be something to watch to see what that looks like when they do that. And you're hearing some people say the market is pretty much driven on liquidity, especially the crypto market. When there's more liquidity, market goes up. When there's less liquidity, market goes down. So we'll have to see how that goes. I'm not really doing too much portfolio-wise right now. I'm kind of just saying, all right, I got my positions. I'm holding them. I'll buy weakness, and I'm going to keep looking around. But in my opinion, I'm not buying anything aggressively. I'm still keeping a good cash position, whatever wasn't eaten by the NVDA trade. And then focusing on my business, focusing on my studying, focusing on the sun, reading, all those things for MP3 fitness. So right now, taking a little breather on MP3 finance. I'm always going to be in the market. I'm always going to be watching. It just feels a little bit like a casino, so I'm taking a little bit of a step back. But today I did buy some more PayPal. I did buy some Enphase last week. And I am looking at data center REITs, digital realty trusts. So REITs sound like a horrible idea right now with commercial real estate. But if you put the pieces together, semiconductors. Every semi stock is super hot right now. And those semiconductors aren't necessarily going into iPhones. They're going into data centers. So data centers, they seem to be on the upswing, right? So everyone's buying these NVIDIA chips to put in their data centers to run AI over the internet and run their database, on higher computing power. So data center REITs. A REIT is a real estate investment trust, so it's a pool of properties that are put together, and then you can own a share of this pie of properties. So there's digital realty trust, and then there's also Equinox or something like that. What is this one? yeah, Equinix, whatever this is called. So these are the two that I found. Um, and me personally, I've been investing in digital realty, DLR. So this is just a little baby position to keep it on my watch list. But again, it's hated right now, which REITs should be hated because I don't really know what's inside here, but from the research that I did, they have data centers all over the world. And they're in pretty good locations, and their customers are the big dogs: Oracle, Google, Facebook, Microsoft. So, anyways, that's something I'm looking at, and I could see this being pretty interesting. So, I'll be watching this. Maybe I'll give a video on this down the road. Um, that's about all I got for you guys today. So, if you thought I jumped off a bridge, can't get me that easy. I'll always be here, baby. But anyways, I hope this helps. But that's all I got for you guys today. Be safe out there. Play stupid games, win stupid prizes. Stay wary of the casino.